Speaker, good evening, one and all. Our chairman could not participate due to unavoidable reasons. So I'm taking the role of acting chairperson, and I welcome you, Speaker, sir, on behalf of Madurai branch and on behalf of the members of Madurai branch. We are very happy to have you in Madurai. We would like to have you physically one time. And thank you very much for accepting our invitation to present the members with the topic of Section 148 response to notices. Thank you very much once again. I now request Acting Secretary CA S.T. Venkatesh to introduce the speaker of the day.
Happy evening to one and all. It is great pleasure for me to introduce our today's speaker, CA Naveen Khariwal ji, who is going to discuss the topic on response to notice under Section 148 of the Income Tax Act. He is a commerce graduate and qualified chartered accountant and a partner in one of the leading Bangalore-based CFM. And he comes from CA family. His grandfather, father, and brother are chartered accountants. His area of practice is specialization in direct tax. Co-opted member of the Direct Tax Committee of ICA, New Delhi for the year 2020-21. He is member of Central Taxes, Corporate Taxes and the GST Committee of Federation of Karnataka Chambers of Commerce and Industry, Bangalore. Member in Finance Advisory Committee of the Karnataka State Cricket Association, Bangalore, Karnataka. Member of Study Circle Study Group Committee of Chamber of Tax Consultants, Mumbai. He is speaker at various seminars organized by various branches of ICA, SIRC, NARC, and WIRC, and other industrial forums and other professional bodies forum. His extracurricular activities is a keen cricketer, having represented colleges in university matches and played in league registered with Karnataka State Cricket Association. Was the captain of the team which won the cricket tournament organized by KSCA along with Bangalore branch of SIRC. Lead the cricket team of Bangalore branch of SIRC of ICA to national level cricket tournament organized by Pune branch at Pune Crickets for Amateur 2015 Pune. With these few words, I introduce CA Naveen Khariwal ji before this virtual forum. Now the session is yours, sir. Thank you.
Thank you, our Venkatesh sir, treasurer of the branch, and thank you, our chairperson, Madam Manige Megalai. It gives me immense pleasure to address members of the Temple City of Madurai branch. In fact, I would have been happily, even physically present there to get the darshan of the, our.
Certainly, we'll like to have your physical session once, sir.
So nice of you to invited me to address the members. Now, let me delve into the topic deep. Now, if you see, my dear members, professional colleagues, in your last 30-35 years of your practice, in the last year is the first year where more than thousands of notice under 148 have been served all over India. All over India, if you see, thousands and thousands of notice have been served under 148. Now, how do we reply? How do we reply? Is the reply to be filed online? Is the reply to be filed offline? What are the nitty-gritties? And also, because of the amendment in the budget 21, wherein, the section 148A, 148, 149, 151, etc. were altered, amended, substituted. And a new section 148 capital A was introduced. Keeping in mind these amendments, what is the impact on your assessee now? So we will go through all the nitty-gritties and issues even in the new reassessment regime under 148. Now let me start my presentation, my dear colleagues. Full screen. So now let me just take you to my PPT. Now this is, the notice which is issued under 148 now, under the old regime. So how do we now reply to the notice? Now, please understand, my dear friends, you have to start right from the top. First, you please see this notice under 148. See the first two lines. I have reason to believe that your income chargeable to tax has escaped assessment. Then, see that next line. These are all pre-printed notices being issued all over India. I therefore propose to assess or reassess. Catch the assessing officer there now. Are you wanting to assess or are you wanting to reassess is my first issue. I therefore propose to assess, reassess income or loss. And I hereby require to deliver me within 30 days of the service of this notice. There is no doubt about it. Now, what about service of this notice? Now, long back, the Supreme Court held in these cases, service of notice and issue of notice, there are two different things. So normally, the issue of notice is followed by service of notice. The issue of notice precedes the, service of notice. So what happened now? Earlier, our members used to, we used to take the brown envelope. We used to see what is the date of service, date of issue, etc. Today, my dear friends, it would be very difficult because the notice will be issued through the registered account of the assessee on the portal itself. So when you just open the portal, you go to the e-proceeding tab, etc. Under that sub tab, it will just come out there on. When you press there, it will just come out there. So there is no question. You cannot tell that notice has not been received or not been issued. It becomes difficult now. Unlike in the olden days, we used to see, suppose the notice is stated, say 31st March. We used to see, the notice can be 31st March, but it should be served within a reasonable time. The notice cannot be, 1st of April and then served on, say, 7th of April. It should be, within the end of the relevant assessment year. Now, so this may not be of much, importance in the issue of notice under the new regime because everything comes online only now. Next, this assess or reassess, we'll have to question the notice, whether you want to assess or whether you want to reassess. And then now he's telling within 30 days of service, you please file the return in the prescribed form. So you, my dear friends, filing a manual return will not help you unless there is a technical glitch on the portal. Suppose you are not able to upload the return, then I can as well write that in my reply and attach a hard copy of the return, file it in the tapal of the department, take an acknowledgement. But you have to keep an eye on the portal as and when the technical glitch is resolved. You will have to necessarily, mandatorily, compulsorily upload the return of income under section 148 of the Act only. And then what you have to do is, after uploading the return, it says here, this notice is being issued after obtaining necessary satisfaction. Please ask for a copy of the satisfaction. In the letter, therefore, after uploading the return, you will be uploading the return. For example, the return is already filed. You will upload the same return under section 148. Now, what was uploaded under 139? 1, 4 or 5, you will upload it in 148 declaring the same income and then attach a copy of that acknowledgement to this letter. In that letter, we are going to question it. We are going to tell kindly give me copies of reasons recorded. Why? That is the dictum of Supreme Court in GK and Drive Shaft 259 ITR 19 at page number 19. So Supreme Court is telling, my dear assessee, you have filed the return. You have now very much, you have got a vested right to ask for a copy of reasons. So in that letter, I'll ask kindly give me a copy of reasons recorded. Also, kindly give me a copy of necessary satisfaction obtained by PCA. And you will attach a copy of the acknowledgement. Supreme Court is crystal clear. You upload the return under 148 and thereafter only you can ask for a copy of reasons recorded. When you ask for a copy of reasons recorded, the assessing officer is bound to give you a verbatim copy of reasons recorded. As it is, the reasons has to be reproduced as it is. He cannot give a summary of the reasons recorded. He cannot twist the reasons. He cannot amend the reasons. He cannot alter the reasons. Whatever is recorded in the file, verbatim reproduction, he has to share it with the assessee. Once the copy of reasons recorded is shared with the assessee, then the assessee can file his objections. Assessee needs to file his objections to the reasons recorded. Once we file the objections, my dear learned colleagues, what the assessing officer will do, he will dispose of that objections stating what? As if it is an order passed. He will dispose of the objections as if it will be an order passed. After the, the objections are disposed of, it is your call. Whether you want to stop, then the assessing officer will take up the case for regular scrutiny by issue of notice under 143.2 and then pass an order on 147 read with 143.3. Else, if you feel that, you are aggrieved with the objections, then you can file a writ petition. You can definitely file a writ petition, but you can't file an appeal. Appeal can be filed only against the order passed under section 147 read with 143.3. But before that, necessarily, he has to dispose of the objections, and that objection should be treated as if an order has been passed. Now, so when we are asking, for this reasons recorded, when we are asking for the approval, etc., once you get the approval, question the approval also. Please, if you see the name of the assessee may not be correct, the address of the assessee may not be correct. Approving authority, they say, here they say is PCIT, etc. Category assessment, yes. Income escaping assessment is more than 1 lakh, yes, etc. Sometimes, here, what is the income escaping assessment? Ultimately, in the reasons recorded, it may be 20 lakhs. Here, they may write 10 lakhs. So that also you can object. Or ultimately, this figure, this column will be left blank. But ultimately, some addition will be made to the income escaping assessment. So these are technically, I am telling you, you will have to question all this. Again, if you see here, circle 2 to 1 year as per annexure here. Again, recommendation details, considering reasons, I am satisfied it's a fit case. Again, this is the PCIT. This is the additional. This is the ACIT. Then this is the additional. Additional is telling yes. Considering reasons stated by AO, I am satisfied fit case. Similarly, PCIT is telling I have gone through the reasons recorded by AO and additional CIT. Matter was discussed with additional CIT along with records. I am satisfied that income has escaped assessment within the meaning. My dear friends, there are many case laws which says this approval is given without application of mind. Just telling that I am satisfied, etc. It is considering reasons it's a fit case. I am satisfied. Yes, I approved. All these courts have held that these are all mechanically you have approved without application of mind. Therefore, technical itself, very much this order will stand, it may be, quashed at the beginning itself, the notice. Anyhow, these are all the reasons recorded. What you are telling, reasons, the reasons shared with the assessee. And therefore, you'll have to object to each line. So that is how you have to go about it. Now, that was under the old regime. Now, if you take the amendments, we are more interested in the new reassessment regime. Now, if you see the budget speech of Madam Nirmala Sitharaman, at para 153, what she's telling, an assessment can reopen up to 6 years and serious tax fraud cases up for up to 10 years. As a result, taxpayers will remain under uncertainty for a long time. So, earlier it was up to 4 years from the end of assessment year, up to beyond 4 years, up to 6 years, in case the income which has escaped assessment is more than 1 lakh. Okay. Beyond 6 years, up to 16 years in a case of a resident in India having any income from asset abroad not declared, or having any asset abroad which is not declared, then 16-year cases could be reopened before this 21. After the amendment, that 16 years has been removed now. So what was up to 4 years, beyond 4 years, up to 6 years, beyond 6 years, up to 16 years. Now there are only 3 time limits. That 16 years has been removed altogether. And for 4 years, it has become, they have reduced it. That 6 years has now been reduced to only, 3 years. And then there is an upper limit of 10 years. So today there are only 2 time limits, 3 years and beyond 3 years up to 10 years. So para 154, Madam is telling, I therefore propose to reduce this time limit for reassessment of assessment, reopening of assessment to 3 years from the present 6 years. In serious tax evasion cases too, only where there is evidence of concealment of income of 50 lakhs or more, can the assessment be reopened up to 10 years. Even this reopening can be done only after the approval of Principal Chief Commissioner, highest level of the income tax authority. This is a very welcome amendment. Now we are telling what the Finance Minister is telling is, now no question, you want to reopen beyond 3 years. Up to 3 years is telling you reopen, I have no problem. Beyond 3 years, if an income tax authority wants to reopen the case, she's telling take the approval of the highest authority. Go and take the approval of Principal Chief Commissioner, highest level of the department. Yeah, so you'll have to go take the approval, and that too you can open beyond 3 years up to 10 years. Only if the income which has escaped assessment is 50 lakhs or more in a year. For example, beyond 3 years and up to 10 years, think for example, for beyond 3 years up to 10 years, in 3-4 years, it is only 50 lakhs and above. Balance 3-4 years, it is not 50 lakhs and above. Then you cannot reopen for that year. Beyond 3 years and up to 10 years, if you want to remove, point number 1, income that should have escaped assessment should be 50 lakhs or more. Again, that reopening can be done only after the approval of Principal Chief Commissioner, highest level of income tax department. As we progress further, we will discuss further. Don't worry. Now, why this amendment was made? if you see, madam is telling here, explanatory memorandum. Now, in this reassessment, that 148 is also there. Even the search provisions, 153A, B, C, D was there, 132 and 132A is there, but 153A, B, C, D are now deleted in the statute, and even the search provisions are merged in the reassessment provisions now. So be careful now. Even the search provisions, 153A, B, C is deleted from the statute, 132, 132 is there. 153A, B, C assessment procedures with reference to search that has been deleted in the statute. Therefore, search provisions get merged with the reassessment provisions. Therefore, now I can reopen up to 3 years, beyond 3 years, up to 10 years in case of any assessment year where income escaping assessment is 50 lakhs or above. And that also should be represented by an asset. The law further goes on to say that undisclosed income should be represented by an asset. So we'll wait and watch. What do you mean by that asset, etc. We'll see all the, issues in that. Now, why madam is telling, why did I bring this amendment? Earlier, my dear friends, all experienced professionals, practitioners, you will know, by Finance Act 2003, this 153A was introduced, Finance Act 2003. Before that, there was a concept of block assessment, chapter 14B, where, only one form was there, that 6 years return or 7 years return should be filled only in one column. Form 2B was there earlier in block assessment. So 7 years return I has to fill only in one return. Thereafter, 153 ABC came from Finance Act 2003, wherein I used to fill up 7 returns, including year of search. So 6 years, 6 separate returns, 7th year, 7 separate returns. Earlier, it was prior to 2003, there was concept of block assessment, which was given a go by. Then 153 ABC came. That is also now substituted by this new provision. So why was that 153 ABC introduced in place of block assessment, first of all? That is because it is stated in the explanatory memorandum. Then this was done due to failure of block assessment in its objective of early resolution of search assessment. Also, the procedural issues related to block assessment were proving to be highly litigation prone. However, the experience with the procedure has been no different. This is all given the memorandum. They are telling why we replace block assessment with this 153 ABC regime, because all the procedural issues related to block assessment was proving to be highly litigation prone. Now, madam is telling, unfortunately, experience with this procedure has been no different with 153 ABC. Therefore, she goes on to further tell, like the provisions of our block assessment, the provisions for 153 ABC has also resulted in number of litigations. Now, therefore, because of the advancement of technology, the department is now collecting all relevant information related to transactions of taxpayers from third parties and 285BA. That is your statement of financial transaction, etc. Similarly, information is also received from other law enforcement agencies, etc. Information is also shared with taxpayer through your annual information statement, your 26 years compliances, etc. Therefore, she is telling there is a need to completely reform the system of assessment or reassessment or recomputation of income escaping assessment and the assessment of search related cases. Now, we'll move further. So, these are all the relevant features they are giving. We will see. Now we move further. We'll take each section at a time, nothing to worry. So what is the new scheme of assessment? Now, new scheme of reassessment is section 147 is order of income escaping assessment. 148 is issue of notice for reassessment. 148 capital A is the procedure to be followed before issuing a notice for reassessment. This is a wonderful amendment, They are telling even before you issue a notice under 148, first you confirm whether the assessee has really, whether any undisclosed income is there, whether any concealment is there, whether at all notice under 148 needs to be issued. So for that, they are telling, we'll give a show cause under 148A. First, you follow the procedure of 148A. Then you decide whether it's a fit case for issue of notice under 148. Suppose I, convince the department under 148A itself that, sir or madam, there is no income which has escaped assessment. I have truthfully declared all my income, paid all my taxes. Then they will tell, don't worry, I'll drop the assessment proceedings. I'll drop the reassessment proceedings. Till today, in my entire professional career, I have never seen that reassessment proceedings are dropped. Invariably, they issue notice under 148 and result in an order passed on 147, read with 143.3. In case of non-compliance, it is 147, read with 144, ex parte, etc. Best judgment assessment. So, this beautiful section is introduced 148A, keeping in mind the dictum of Supreme Court in GK and Right chapter. That I give an opportunity. I'll give an opportunity that yes, I want to issue notice on 148. This is the income which has escaped assessment. You prove. I'll tell no, yes, sir. This, for example, 1 lakh FD interest. Yes, sir, I have declared in my return of income. Please see. Okay, fine. I'm not going to issue notice. I'm going to drop the procedure. And if they want to issue the notice, then they will tell, okay, I'm not satisfied with your reply. I'm not satisfied with your evidence. I'm going to issue a notice under 148. Therefore, necessarily, they'll have to pass an order under 148A clause D. Henceforth, my dear friends, if at all you have to receive a notice under 148 today, you will have to receive a notice under 148 along with that order passed under 148A clause D. That means to say what? Yes, that clause D, all your inquiries are made. It's a fit case for reopening of assessment, basically. Then, thereafter, your 148 notice will be issued and regular procedure. We will see when we come to this section. Now, 149 is time limit for issuing the notice for reassessment. 150, there is no amendment. Assessment in pursuance of an order on appeal, etc. 151 is specified authorities for authorizing the issue of notice for reassessment. 151 is faceless assessment of income escaping assessment. 153 is time limit for completion of assessment or reassessment. Now 147. Now what is the difference between old 147 and new 147? If you see, the old 147, how it started and what is the new 147? My dear professional colleagues, the three magic words, which are the bread and butter of all the advocates and all the chartered accountants, have been removed and deleted from the statute and have been given a silent burial. They have been buried, sir. Reason to believe is gone. The words reason to believe has been removed from the statute, deleted from the statute, picked up and consigned to the dustbin of history. So the first sentence itself under the old section 147, if the assessing officer, who is an assessing officer? 2 within bracket 7A, assessing officer. Definition is given. If the assessing officer reason to believe that any income chargeable to tax has escaped assessment, subject to the provision 148 to 153, he can assess or reassess, and also any other income chargeable to tax escaped assessment comes to his notice subsequently, or recommit the loss or depreciation, etc. As the case may be. This was the old section. See the new section now. Thereafter, there was proviso also in the old regime. There were first proviso, second proviso, third proviso. And then there was one explanation in the old section 147. So 147, we saw the old section. Then there was a first proviso. What was that first proviso under the old provision? They are telling reopening of a completed assessment. I am talking about the old 147. So first proviso to 147 said, assessing officer will say, I want to reopen a completed case. Which completed case? Either I want to reopen an assessment under which section order is passed under section 143.3 or under this section. That means under section 147. So what is contemplating is he wants to reopen a completed assessment. That completed assessment, my dear friends, is under 143.3 or 147. Therefore, if he wants to reopen a completed assessment beyond 4 years, then the act is telling, if you want to reopen a completed assessment beyond 4 years from the end of 11th assessment year, you need to fulfill 3 conditions. What are the 3 conditions? Number 1, return should not be filed under 139, or return should not have been filed in response to a notice issued under 142.1, or in response to a notice issued under 148, or the assessee has failed to disclose fully and truly all material facts necessary for his assessment for that assessment year. Now, doubt of our Venkatesh sir will be, sir, you are contemplating, assessing officer is contemplating for reopening a completed assessment. Reopening completed assessment is 143.3 or 144 or 148, etc. When you want to reopen a completed assessment, what the law is telling, if it's beyond 4 years from the end of assessment year, there should be any one of the 3 failures on part of the assessee. Failure 1 is failure to file a written 139, failure to file a written response notice under 142.1, failure to file a written response notice under 148, or failure to disclose fully and truly all material facts necessary for his assessment. Now, point number 1 is, when it is a completed assessment under 143 or 144 or 148, how can there be a failure of not filing a return? There is no question. Unless I file a return, how can assessment made on 143.3? You are telling me there should be 3 types of failure. Failure to file a return 139, failure to file a return 142.1. Even if there is failure to file a return 142.1, it cannot result in a assessment on 143 or 147. Then again, if it's a failure to file a return 148, again it cannot result in an assessment order passed on 143.3 or 147. Basically, all these 3, my dear friend, indirectly even 144 is included. So therefore, he is telling completed assessment, I want to reopen. What completed assessment? 143.3 or 147. Then there should be 3 types of failures. First 2 failures, we rule it out. 139.1 not possible, 142.1 not possible, 148 not possible. If it is filed, then only orders can be passed. Therefore, indirectly, although not specifically mentioned in the earlier proviso to 147, that 144 can be reopened, indirectly even 144 can be reopened. Because when can 144 be done? When you don't respond to notice under 142. When you don't file a return 139, when you don't file a return under in response to notice issued 148. Therefore, the assessing officer invariably will take come shelter under this. Disclose fully and truly all material facts necessary for his assessment for that year. Anyway, then second proviso, what was it? Nothing contained in first proviso, the time limit beyond 4 years and those failures shall apply in a case where any income relation to any asset, including financial interest, any entity located outside of India, chargeable tax as escaped assessment for any assessment year. Okay. Then the third proviso was provided also the AO may assess or reassess such income other than the income involving matters which are subject matter of any appeal, reference or revision and which is chargeable to tax and escaped assessment. So for example, in the earlier regime, 143.3 addition is made. There are 4 additions and I have filed an appeal. 143.3 order is passed. There are 4 additions made. For example, 3615A, ESI, PF, etc. Sales promotion expenses disallowed. The 43B, GST paid beyond the due date, etc. All these are disallowed and it's subject matter of appeal before the Honorable CIT appeals. I filed an appeal with the first appellate authority under section 246A of the Act. Now, the assessing officer wants to reopen assessment. Which assessment? Order which is pending before the appellate authority. So there is a concept of partial merger, concept of total merger. Anyway, so here the assessing officer, what the third provision is telling, definitely you can reopen an order which is subject to appeal before the appellate authority. But what? Other than the income involving matters which are subject matter of any appeal. So other than those 4 additions, you want to make a 5th addition, then very well the department, based on reason to believe in the earlier regime, they could reopen that. So these were the 3 provisos. Now come to this new section 147. How beautifully, very simple section. If any income chargeable to tax has escaped assessment, assessing officer may, subject to provision 148 to 153, assess or reassess such income, recompute loss, depreciation allowance, or any other allowance or deduction. The deduction word is used for the first time now. That's all. And then there is no such proviso. Those 3 provisos in the old 147, no such provisos here. Again, one explanation was there in the earlier 147. Production before the assessing officer of all account books or evidence from which material evidence could with due diligence have been discovered by the assessing officer will not necessarily amount to disclosure within the meaning of foregoing proviso. How, this 147 procedure totally, in favor of the department, stacked in favor of the department. The explanation is telling, even though you produce before the assessing officer the all books of accounts or all evidences or all material evidences based on due diligence, which could have been discovered by the AO, will not necessarily amount to disclosure. What will you want me to disclose when I've disclosed all this? I've given you all the documents, all the material evidences, all the books of accounts, etc. Still is telling it does not amount to necessary disclosure. Anyway, now the explanation in the new regime is telling, for the purpose of assessment or reassessment under this section, the AO may assess or reassess income in respect of any issue which has escaped assessment, and such issue comes to his notice subsequently in the course of proceedings under this section, irrespective of the fact that the provisions of 148A have not been complied with. That's all. 147 ends. So I am bothered about the new provision. What is that simple provision, sir? Any income chargeable tax escaped assessment for any assessment year, AO, you have to follow the provisions of 148 to 153 as laid down. You can assess, reassess, or recompute the loss or depreciation allowance or any other allowance or deduction for such assessment year. Then there is an explanation which says, the assessing officer may also assess or reassess income in respect of any issue which has escaped assessment, and such issue comes to notice subsequently in the course of proceedings under this section, irrespective of the fact that the provisions of 148A have not been complied with. Meaning to say, Mr. Venkatesh had a business at Madurai. Mr. Venkatesh also had a branch at Bangalore. The profits from the Bangalore branch, say it's hardware stores, Venkatesh hardware stores, profits from Bangalore branch have not been declared and disclosed to the department. What is the reasons recorded? In the reasons recorded or in the 148A, based on which you know that 148 will be issued after inquiry by assessing officer, In 148 order, clearly it states that income from business at Madurai of Venkatesh Hardware Source has escaped assessment. But during the course of proceedings, during the course of this reassessment proceedings, assessing officer also finds out, gets evidence, lays his hands on evidence, which also shows that profit from his branch at Bangalore has also escaped reassessment, although he has not issued 148A. In 148A, what is there in that order? 148A clause D, only profits from Madurai branch escaped assessment. Profits from Bangalore branch, I came to know in the course of proceedings. So this explanation telling, don't worry, you, irrespective of the fact whether 148 have not been complied with, you can still bring to tax the profits from Bangalore branch. Fair enough. Next. So that is, 147. All these are not there, sir, earlier. In the old provisions, what are this explanation? Then explanation 2 was deemed to be income chargeable to tax. Nothing is there here. Now, we move further. Now, earlier, you had those judgments. See, a lot of judgments now have been silently done to death. Several Supreme Court judgments, several High Court judgments, because the section itself has changed. Now, for example, this AO's ability to make additions on new issues if no additions were made even on primary issue. So, what was happening earlier? What is recorded? For example, recorded is income from, this is not there now. Income from Madurai branch. For example, the reasons recorded, income from Madurai branch is escaped assessment. Ultimately, the assessing officer will tell at the end of the, at the time of passing order, reassessment order, he will tell, no, income from Madurai branch has fully declared, but income from Bangalore branch not offered. So he's telling nothing doing. You did not make addition on the primary issue of reasons recorded. What are the primary issue for reasons recorded? Income from Madurai branch escaped assessment. On that you didn't make any addition, but you went on to make addition for income from Bangalore branch. So for this also, he's telling it's allowed now. Why? This CIT versus Jet Airways landmark judgment of Bombay High Court was there. For making addition on either issue and adjustment on the main issue for which the assessment has been reopened should have now been done away with. Because it's not there at all now. So other favorable and against rulings were there. Favorable rulings on Bombay High Court in Black and Which, Ranbaxy Labs, Delhi High Court, Infinity Infotech Calcutta, and then Martech Peripherals, this Madras High Court, Mohammed Junaid Dadani, etc. Courts were emphatic in their opinion. Mr. Assessing Officer, have you made an addition on the primary issue in the reasons recorded? No, sir. Then you cannot make an addition on any secondary issue. Why did you reopen the case on the first place? So and so income escaped assessment. Very good. In the course of the assessment, you found that so and some other income also escaped assessment. You can add that court shilling, but have you made addition on the primary issue recorded in the reasons to believe? No, that means you cannot make addition on this. So all these judgments now have been given a silent burial. Now, similarly, in the ITIT Chennai benches have held that assessing officer would be precluded from making any other addition towards new source of income as prima facie his reason to believe that income had originally escaped assessment had failed. Because you never made a court of Chennai ITIT is telling you want to make addition on new source, but I will not allow. Why? Because the original reasons to record what you have recorded, original reasons to believe what you have recorded, reasons recorded for reopening, prima facie that reason to believe has failed. So therefore, you can't make an addition on the new reason unless you make a reason, unless you make addition based on the reasons recorded of the primary issue. Earlier, this against ruling, now they have been, Majinder Singh, Punjab and High Court, in case of Majinder Singh Tung, SLP dismissed, and Delhi High Court, Jacodia Plastics, and now these two have been now confirmed now because department is siding with this. Next. So the requirement has laid down by favorable rulings that for making addition on any other issue and adjustment on the main issue for which the assessment has been reopened has now been dispensed with by virtue of explanation to newly substituted section 147. Now 148. 148 more or less it is the same. So what is the new section 148? They have added this. Before making assessment, etc. You know what is 148? Notice to be issued before passing the order under 147. So what is 148 telling? Before making assessment, reassessment, and subject to provisions of 148A. Now 148 is subject to provision of 148A. The assessing officer shall serve on the assessee a notice along with a copy of order passed if required under 148A clause D. We will go through 148A, nothing to worry. Require him to furnish within such period as may be specified in such notice a return of his income or the income of any other person in respect of which is assessable under this Act during the previous year, corresponding to the relevant previous year, in the prescribed form and verified in a prescribed manner, and setting forth such other particulars as may be prescribed, and all the provisions of the Act shall, so far as may be, apply accordingly, as if such return were a return required to be furnished under 139. Subsection 2, in the old regime, assessing officer shall, before issuing any notice, record the reasons. Now they shifted to 148A. So 148 is only telling I can definitely issue a reason. I can definitely issue a notice, but that notice will be subject to provisions of 148A. And along with that notice, mind you, my dear friends, from this year onwards, now from today onwards, if you receive 148 along, see the section, along with a copy of the order passed. 148, along with that 148, you should have a copy of order passed if required under 148A clause D. Now there is a proviso to 148. Provided that no notice under this section shall be issued unless there is information with the AO which suggests that the income chargeable to tax has escaped assessment and the AO has obtained prior approval. So what was reason to believe, my dear friends? Reason to believe is gone. Now what the word is specified and substituted is information. In place of reason to believe, now there is information. So they are telling no such notice shall be issued unless there is information with the AO which suggests that the income chargeable tax escaped assessment and AO has obtained prior approval. There are no host of approval. There are 6-7 approvals now. So I don't know the magnanimity on the part of the the exchequer. Now I don't know whether the department has shot itself in the foot by this host of approval, spate of approvals, numerous approvals. Even if they forget one approval, the notice will be wide up in issue. So let us see. Now there is an explanation 1 to 148. So this proviso is what telling? Unless you have information in possession of the AO, you will not be able to issue notice on 148. Plus, you should have taken the prior approval of the specified authority. We will see who are those. Next. Explanation 1 is telling they are giving the meaning of information. Earlier, reason to believe there was no meaning in this section. Now they are telling we have seen last 30 years so much litigation, so many several judgments. So therefore, they are making the section simpler now. We will see whether it is simpler or it will give rise to more litigation. Anyway, now reason to believe is out. What comes in is information in possession of assessing officer that assessee has concealed income. Plus, he should take the necessary approval. Now they are giving the meaning of information. What is the meaning of information? Meaning of information means any information flagged in the case of assessee for the relevant assessment year in accordance with the RMS, risk management strategy, formulated by board from time to time. See what is the information? Everything is computerized, sir. Now, department is totally relying on artificial intelligence. So information should be flagged in the case of assessee, they are telling, in accordance with what? RMS formulated by board, matrix. This information is information flagged in accordance with the RMS strategy formulated board from time to time. You will see the meaning. Or any final objection raised by CAG, Comptroller and Auditor General of India, to the effect that the assessment in the case of assessee for the relevant assessment year has not been made in accordance with the provisions of this Act. Only 2 types of information, my dear friend. The meaning of information means only 2 types. Word clearly it says means. It says information with the AO which suggests that income chargeable to tax escaped assessment means what? Information flagged in case of assessee for any relevant assessment year in accordance with the RMS strategy formulated board or any final objection raised by CAG. That the assessment in the case of assessee for a relevant year has not been made in accordance with the provisions of this Act. Assessment is what? Completed assessment. What is assessment? 2 within bracket 40 of the Act says assessment means an assessment made in 143.3 or 147. Okay, and 2 within bracket 8 of the Act says assessment includes reassessment, etc. Now, what is explanation 2? Then the explanation 2 says for purpose of this section where a search is initiated in section 132 or books of accounts or documents or assets are requisitioned 132A on or after 1st of April 21 in case of assessee or survey conducted 133 other than subsection 2 or subsection 5. That means survey conducted 133 other than your TDS survey or your ceremonial or marriage survey, your marriage or ceremonial survey expenses on or after again 1st April 21. Or the AO is satisfied with the prior flow of principal commissioner that any money, bullion, jewelry, valuable article, thing or seized like your 153C or requisition 132 or 132A in case of any other person on or 1st of April belongs to assessee or any other person. So, fourth one says, the AO is satisfied with the prior approval of the principal commissioner or commissioner, any books of accounts or documents seized or requisition in case of person on or after 1st April 21 pertains to or pertain to or any information contained therein relate to the assessee. Then, in these 4 types of cases, AO shall be deemed to have information which suggests that income chargeable tax escaped assessment, and for 3 assessment years immediately preceding the assessment year relevant to previous year in which search is initiated or books of accounts are assessed or requisitioned or survey is conducted, in case of assessee or money, bullion, jewelry or valuable article or thing are seized. That means in 4 cases, in case of search, in case of survey, or in 153 cases, 153C type cases. That means what? You know, the books of accounts or documents or assets are requisitioned, or money, bullion, jewelry or valuable article or thing or books of accounts, documents are seized in case of any other person. In these 4 cases, my dear friends, it is telling department has got deemed information that what? Income has escaped assessment for 3 years. So for search, I have no problem. You are reopening for 3 years. Earlier it was 6, now it became 3 years. I am very happy. But for survey, my dear friends, amendment is made. Henceforth, if there is a survey, 3 years cases will be reopened. Please, clearly it is no. Deemed information they are telling. If you see here, yeah. Shall we have deemed to have information for 3 assessment years immediately preceding the assessment year relevant to the previous year in which the search is initiated. So for survey also, no, be careful. I do not know why, you know, they are troubling the people for survey also. Search, okay. 3 years you want to reopen. Earlier it was 6 years. I am happy. So now you are going to reopen only for 3 years. And for survey, earlier only the year of survey. Now they are telling 3 years I am going to reopen. Explanation 3. For the purpose of this section, specified authority means the specified authority referred to in section 151. That is your approval. We will see. Sanction or approval. Now, so what are the first proviso for this 148? First proviso says what? Notice can be issued only if the AO has information which suggests that income chargeable tax. You know, if there is information which suggests that income chargeable tax escaped assessment, then again prior approval has to be taken. Then what is explanation 1 and explanation 2, sir? Explanation 1 and explanation 2. Explanation 1 gives the meaning of information. Explanation 2 is what? Meaning of deemed information. What is explanation 1? The 2 types of information are there. One, you know, that information means what? Which is flagged based on the RMS strategy formulated by board or based on the, who is that, CAG. Those 2 types of information, explanation 1. Deemed information, you know those 4 cases. Then what will happen in explanation 2, deemed information? Automatically case will be reopened for 3 years. Now let us see the meaning now. What is information flagged in accordance with RMS strategy formulated by board? And what do you mean by final objection raised by CAG that the assessment has not been made according to the provisions of the Act? Now, if you see here, that information, that reason to believe has now shifted to the possession of information which suggests that income has escaped assessment. Now, as per Oxford Dictionary, what does it mean? Information means facts told, heard, or discovered about something or somebody. Law lexicon describes the term information as the act or process of informing, communication, or reception of knowledge. Now, the Supreme Court gave the meaning of information here. What is the meaning of information? Supreme Court held in Raman and Company 68 that in expression information means instruction or knowledge derived from an external source concerning facts or particulars or as to law relating to a matter bearing on assessment. In one more Supreme Court judgment in case of Maharaj Kamal Singh, Supreme Court held that the word information includes information as to the true and correct state of law. Word information includes information as to the true and correct state of law, and so would cover information as to the relevant judicial decisions. Because I don't know what is information now, I'm trying to find out. I am first seeing the dictionary meaning. I am also seeing the meaning of information in Supreme Court. Now, what do you mean by information flagged by CBDT? You have to be very alert now. So, he is telling risk management strategy. What is risk management strategy, sir? They are telling such flagging of information would largely be done by the computer-based system. Flagged means on the system only, based on the basis of predefined algorithms, which may not be made public. So however, it's pertinent to know which information can be flagged. What can be flagged? Now, what is the information? Plethora of information. Go on the website, go on your IT portal. In 26 years, what all information is there. Your first GST turnover will be there. GST turnover they are giving. Then in that compliance portals, this is the cash deposit in bank. This is the cash withdrawal from bank. These are the mutual funds which are sold. These are the shares which are sold. This is the dividend received. This is the interest received. This is the rent received, etc. So many information is there. And FDs you have made, even that is available, in 26 years. Then, this 285B, all these, third parties, they are filing that SFT, Statement of Financial Transaction or Reportable Account. For example, credit card institutions, they are going to file the details. More than 2 lakh rupees credit card, it will be flagged. Your cash deposit in SB account, say more than 10 lakhs, cash deposit in current account, more than 50 lakhs, etc. Foreign travel, opening Demat account, etc. And, your purchase or sale of involved property, more than 30 lakhs, etc. Purchase of bonds, etc. And, there's so many things are there. So all these, are information received from other law enforcement agencies or foreign countries, or even it can be due to retrospective amendment in law, subsequent court rulings, etc., or correct interpretation of a provision given by the board for advanced ruling. So all this I'm telling you, it will be mixed and it will be put in what? In that risk management strategy. We don't know what is risk management strategy. It is not defined in the public domain. So probably CIT appeals, if we ask, the petition is made based on risk management strategy, they will not share what is RMS of the board formulated. What is the system flagged? What is that information flagged based on RMS formulated by the board? So that will not come. We don't know. CIT appeals does not have the power to share. ITAT cannot share. Only the High Court. Only when you go to High Court can give a direction. I will ask, give me, sir, what is risk management strategy? It is like your stock exchange, probably. We don't know. All this information is collected and mixed and put in that, fed in the system. Algorithm is made, fed in the system, and then, that RMS is framed. Based on which the system, based on that predetermined algorithm, it will be flagged. So and so. Based on that, that becomes information for the department. Department will tell, I don't know. This is the information generated by RMS. Who gave you? So that no more reason to believe. No more subjective satisfaction of the assessing officer. Based on surmises or, his subjective satisfaction, etc. Nothing doing. Now he's telling what? Based on RMS strategy. What is information? Sir, I got information suggesting that income escaped assessment. How did you get that information? Based on RMS. What is RMS? It is formulated by board. I don't know. What is that risk management strategy? So in that risk management strategy, these various types of information will be fed in the system. So once this is fed in the system, we don't know, like stock exchange, it may be updated on daily basis. It may be updated on weekly basis. It may be updated on monthly basis. It may be updated daily, or it may be updated once in 6 months. We don't know. Unless we'll have to go to High Court and get the details. So now, therefore, department, they got that reason to believe. Reason to believe, so many cases, everything got to Supreme Court. Now they are telling you, remove that word reason to believe, simply put information. Information based on RMS strategy, matters. That is behind RMS strategy, they can feed whatever they want. So based on such particulars, this is only as a suggestion I'm telling you, because nobody knows what is the risk management strategy. What happens in risk management strategy? All this information will be gathered and dumped into that, mechanism. So based on such particulars, reassessment can be initiated by the AO, provided such information is flagged in RMS. Assessing officer cannot personally say that I am in receipt of information. Question is, now assessing officer says, I have no right. Who are you? Have you got a right to reopen? Nothing doing. Based on information suggesting that income has escaped assessment. Who is to suggest that information? It should be flagged. Based on what? Based on risk management strategy formulated by whom? Central Board of Direct Taxes. That fellow will give information. Assessing officer take that information, quietly reopen the case. No more subjective satisfaction of the assessing officer. No more reason to believe of the assessing officer. No more reason to suspect by assessing officer. Next. So long back, Supreme Court held in this Parshuram Pottery that there must be finality in all legal proceedings, and reopening is not permitted unless a case falls strictly within the 4 corners of law, providing for reopening of assessment. Therefore, there is a conceptual difference between power to review and power to reassess. The assessing officer has no power to review. He has the power to reassess. And the reassessment has to be based on fulfillment of certain preconditions. the CBDT should accordingly frame RMS considering that there should not be any arbitrary information. It's only a suggestion. We don't know what is fed in the RMS, based on which the reassessment proceedings are initiated by the assessing officer. Now, that will continue. Linkage with actual escapement of income. Information flagged in taxpayer's case for relevant assessment here, in accordance with risk management strategy formulated by CBDT, from time to time should also have linkage with actual escapement of income as held in the old regime. Now, this RMS, I told you, it is an internal document. It can change on daily basis, yearly basis, weekly basis, monthly basis, etc. So, being an internal document of the department, very difficult of the taxpayer to understand the criteria basis which the information is flagged. Now, what about the second type of information? Your objection raised by Comptroller Auditor General that the assessment has not been made in accordance with provisions of the Act. So now income shall be deemed to have escaped assessment if any final objection is raised by Comptroller Auditor General of India. My dear, the C&AG is not even an income tax authority under 116. All my experience, the chartered accounts, assessing officers in the earlier days used to do the scrutiny. They used to pass the order 143.3. Thereafter, all your experience chartered, there was RAP and IAP, Internal Audit Party, Revenue Audit Party, etc. And then, they used to raise some objections. For example, they will tell ATC, you have claimed a Mediclaim receipt not there, 80D, ATC PPF receipt not there, 43B, that VAT payable receipt you have not given. You have not given confirmation from loan creditors, etc. etc. So many things. So, final objection raised by C&AG to the effect that assessment has not been made as per provisions of the Income Tax Act now. Earlier, based on IAP, RAP, they couldn't have reopened. Supreme Court judgments were there. Now all nullified. The court were emphatic in their opinion. Who are you? You are only supposed to give an opinion. You being the C&AG, you are being an internal auditor, you are coming for auditing the file of the assessing officer. You can only advise. You cannot pass an order. Order will be passed only by the department. So therefore, Supreme Court judgments were there. Now they have, sound the death knell of all those judgments. Now they are telling C&AG has got the power. What? Final objection raised by C&AG to the effect that the assessment has not been made as per provisions of the Income Tax Act. So prior assessment is mandatory, and some issue which has not been visited by AO during original assessment proceedings, and C&AG feels same leads to escapement of income, they can reopen. Earlier, settled law that final objection of CAG is not law is now unsettled. This Indian Eastern Newspaper Society, very famous judgment of Supreme Court, 2 Taxman 197. Department would be well within its right to deem the final objection raised by CAG, pointing out under assessment in a case to be information, even though this deeming is inconsistent with judgment of Honorable Supreme Court. Such final objection by CAG on the material on record already considered by AO cannot under any circumstances be considered as information in accordance with the said judgment. It's already a material on record, already considered by AO. In other words, it was what? It amounted to change of opinion. Whether an interpretation of facts or law in respect of material on record already considered by AO resulting from final objection of CAG cannot constitute information. Such a change of opinion cannot entitle AO to reopen assessment when his opinion on the impugned matter was clearly evident in the original audit. Also, even more significantly, since the audit machinery does not at any stage gives an assessee an opportunity of being heard before deciding to make an objection final, making such an objection the basis for reopening assessment is ultra wires the equality enshrined in Article 4 of the Constitution. Now, earlier, this internal audit by the department, what they were doing, primarily it is set up for imposing a check for arithmetical accuracy on determination of tax, etc. Now, because of the audit of income tax receipts being entrusted to CAG from 68, is intended as an exercise in removing mistakes and errors in income tax records before they are permitted for such scrutiny by Comptroller and Auditor General. Now, however, what are they telling? And paragraph 3 in this board circular wants the audit department should not in any way substitute itself for revenue authorities. You cannot step into the shoes of revenue authorities in performance of their statutory duties. Paragraph 4 declares of this board circular, audit does not consider it any part of its duty to pass in review the judgment exercised or decision taken in individual cases by officers entrusted with those duties. But it must be recognized that an examination of such cases may be an important factor in judging the effectiveness of assessment procedure. It is, however, to forming a general judgment rather than to detection of individual errors of assessment, etc. Audit inquiry should be directed. So earlier, because of the judgment, Honorable Supreme Court held that it is not intended that the purpose of audit should go any further. Clearly, Supreme Court has told, audit has no power of judicial supervision. Whether it is an internal audit party or an audit party of the C&AG, they perform essentially administrative or executive function. And it cannot be attributed to the power of judicial supervision over quasi-judicial acts of the authorities. Neither the Income Tax Act nor the CAG Act supports the conclusion that an audit party can pronounce on the law and that such pronouncement amounts to information within the meaning of 147B. Now the judgment is overturned. Earlier it used to say audit party does not possess the power to so pronounce the law. It nevertheless may draw the attention of ITO to it. Law is one thing, communication is another. But now, because of this amendment, now objection now validates the erstwhile Covert Act. Yeah. So therefore, now whatever objections are raised, it will become automatically information, and the final objection raised by C&AG would definitely become information which will suggest that income has escaped assessment. Now come to your deemed information, explanation 2. Explanation 1 gave the meaning of information. Explanation 2 is giving the meaning of deemed information. You know that situations. Search is initiated at 120, 132, or books of accounts or document requisition 132A, or survey is conducted at 133A, or the assessing officer is satisfied that any money, bullion, jewelry, or valuable article, thing or seized or requisition in case of any other person belongs to the assessee, like your 153C cases. Then how many years information is deemed to have escaped assessment? Deemed to have escaped assessment 3 assessment years. Immediately preceding the assessment year, relevant to the previous year in which search is initiated, or books of accounts, or money, bullion, jewelry, other valuable article or thing are requisitioned or seized. Automatically 3 years will be reopened. Now this insertion of 148A. So this 148A is very welcome amendment. The principles of GK and dry shaft laid down in 259 IDR page 19 have now been incorporated in the statute itself under 148A. What is the heading of 148 capital A? Conducting inquiry, providing opportunity before issue of notice under section 148. So 148 is say the assessing officer shall, please mind the word shall, mandatory, compulsory, before issuing any notice on 148A, conduct any inquiry with prior approval of specified authority with respect to information which suggests that income chargeable tax escaped assessment. B, provide an opportunity of being heard to the assessee with prior approval of authority by serving upon notice to show cause within such time as may be specified, not less than 7 days, not exceeding 30 days from the date on which notice is issued, or such time as may be extended by him on basis of an application in his behalf, as to why notice under 148 should not be issued on basis of information. C, consider the reply of assessee furnished. D, decide on the basis of material available on record, including the reply of the assessee, whether or not it is a fit case to issue notice under 148 by passing an order with the prior approval again within 1 month from the end of the month in which reply referred to in clause C is received, or where no such reply is furnished, within 1 month from the end of the month in which time or extended time to furnish a reply expires. So what is this? Very beautiful section, sir. He is telling now information is flagged. There are 2 types of information. Explanation 1, information. Explanation 2, deemed information. What are the 2 types of information? Information is flagged based on the RMS strategy formulated by board. Again, final objection by C&AG. Okay. So you got information. Very good. Based on that information, now 148A clause A, assessing officer is telling you got that information. Very good. Please conduct inquiry for what? Even before issue of notice on 148, you are bound to conduct an inquiry. Even that inquiry, what you have to conduct is with prior approval of specified authority. With respect to that information, what you have received suggests that income has escaped assessment. Then, after you have conducted inquiry, given opportunity of being heard to the assessee, 148A clause B, given opportunity of being heard to the assessee, again after approval of specified authority, by serving upon him a show cause notice. Minimum time give 7 days, maximum you have to give 30 days. Minimum time 7 days, but not exceeding 30 days, maximum time 30 days. For what? Opportunity of being heard, that is, give a show cause within such time, minimum 7 days, maximum 30 days. Or the law is telling, the section is telling, okay, even though minimum 7 days are over, maximum 30 days are over, let him, even if he has filed an application for extension, even on behalf of that, as to why notice in 148 should not be issued, even during that extended time also you can allow him, which suggests that income chargeable as escaped assessment. It's giving an opportunity of being heard now. Minimum 7 days time is telling you show cause as to why income shall not be added as deemed income under income escaping assessment. Minimum in 7 days time, you give your reply, maximum 30 days, or I can also consider beyond 30 days also, based on your extension request. Then the assessee will file the reply, sir. Yes. So he will consider the reply of the assessee. Then D, based on all the material available on record, including the reply of the assessee, he will decide whether it is a fit case. What to decide? Whether it is a fit case to issue a notice under 148. Still see, now it has begun. Whether it is a fit case to issue notice under 148, for that also is bound to pass an order under 148A clause D. So again, for that there is a time limit to pass an order. What order? Whether it is a fit case to issue a notice under 148, that will be under 148A clause D. What is the time limit? Within 1 month from the end of the month in which reply referred to in clause C expires, is received by him. That minimum 7 days, maximum 30 days, or in case of further extension, or where no such reply is received, within 1 month from the end of the month in which the time or extended time to furnish a reply expires. So he is giving at every step principles of natural justice is ingrained in the statute. So accordingly, 148A D order will be passed. So the dictum of Supreme Court judgment G can drive out is basically fed in the statute itself. Court has given respect to the judgment. Yes, sir. We'll give you all the opportunity. Now, but careful, my dear friends, that 148A provision shall not apply in a case where search is initiated 132, or assets or documents or requisition, books of accounts or assets or document requisition 132A, or any money, bullion, jewelry, valuable article or thing or books of accounts or documents are seized in a search under 132 or requisition 132A, which pertains to or pertain to any information contained therein, etc. So in these 3 cases, meaning is what? There is deemed information that which suggests that income has escaped assessment. I am not going to give you opportunity at 148A. It is deemed to suggest that I have got information. Provisions of this section, which section 148A shall not apply in a case in these 3 cases. Meaning to say, what is missing here? Survey is missing. Only in case of search, requisition, money, bullion, article, etc. seized, books of account, documents seized, 132, 132, etc. pertains to or pertain to like your 153C cases only. In these 3 cases, information, your 148A procedure will not be followed. Therefore, it is deemed to have escaped assessment. So for survey is not mentioned. That means what? Even for survey, you have to follow those steps enshrined in 148A. 148A, B, C, D, etc. Now, this is the procedure what we discussed. This is your, faceless assessment, new faceless procedure under 148A. We discussed that. Just now we discussed 148A. So here, what is that? Now, issue of reopening under 148 with your specified authorities prior approval, along with providing order 148A taxpayer, new limit for reopening is what? Okay. Whether anyone in possession books or other documents, evidence, income escaped assessment represent form of asset, income is greater than 50 lakhs, yes, can reopen 10 years, no, can reopen only past 3 years, etc. We'll see that. Now, 149. If you see 149 here, second, yeah. Aforesaid procedure is mandatory. That 148A notice issued without following aforesaid invalid, except in the following cases. So 148A will not be followed in these following cases. Search initiated under 132 or books of account requisition on or after 1st April 21. Tax authority satisfied any money, bullion, jewelry, belongs to taxpayer. Tax authority satisfied the books of accounts or documents seized. Okay. Next. 149. To see this 149, there's a major amendment. You know what was earlier up to 4 years, beyond 4 years, up to 6 years, beyond 6, up to 16 years. Now there are only 2 time limits, that is 3 years and 10 years. Up to 3 years, beyond 3 years, up to 10 years. When can I go beyond 3 years but up to 10 years? Unless the AO has in his possession books of accounts or other documents or evidence which reveal that income chargeable to tax is represented in the form of asset which has escaped assessment, likely to amount to 50 lakh rupees. Now, first proviso, what is it telling? Provided there are first proviso, second, third, fourth proviso. We will see those 4 provisos. Explanation is telling for the clause B, what is being asset? Asset shall include immovable property, being land or building or both, shares and securities, loans and advances, deposits in bank account. I don't know, whether it is a benevolence. What is the reason for the benevolence granted by the exchequer or granted by the legislature by telling that if I want to reopen a case beyond 3 years up to 10 years, first point is unless the AO has in his possession books of accounts or other documents or evidence in the form of asset, which reveal what? That income chargeable tax represented, income chargeable to tax represented in the form of asset. What is liability, sir? Suppose there are loan creditors. You are telling me only it should be represented in the form of asset. I don't know the reason for this benevolence or this largesse, given by the legislature, granted to the SSC, likely to amount to or 50 lakhs or more, and that too they are giving the meaning of asset. Asset shall include immovable property, being land or building or both, shares and securities, loans and advances, deposits in bank. They are only giving these are the assets. Anyway, shall include immovable property, land or building or both, shares and securities, loans and advances, deposits in bank. One provisions of section as issue of notice shall be subject to 151. Okay. What is that first proviso now to 149? What is second proviso? What is third proviso? What is fourth proviso? We will see. Now, anyway. So the explanation is inserted to new 149.1 to define the meaning of asset, which are only 4 types: immovable property, land or building or both, shares, securities, loans and advances, deposits in bank. Thus, notice can be issued up to 10 years if the assessing officer has evidence in his possession which reveals that the income escaping assessment represented in the form of any asset amounts to or is likely to amount to 50 lakhs or more. The income escaping assessment may be represented by any immovable property, shares, securities, loans, etc. Now, all these are not there now. Earlier, what was there? All these are now deleted. 149. So, reassessment of cases. Now, amendments relating to timeline for issuing notice in 148 in case of reassessment of cases other than search, seizure, and survey. So, reassessment of cases other than search. No, there are two. Now, there are 2 buckets. One is reassessment of normal cases other than search, seizure, and survey. One is reassessment of cases of search, seizure, survey. So, what is the time limit, sir? Reassessment of cases other than search, seizure. Within 3 years from the end of relevant assessment year, or beyond 3 years, or within 10 years from the end of relevant assessment year. If AO has in his possession books of accounts or other documents or evidence which reveal that income chargeable tax represented in the form of asset which has escaped assessment amounts to or likely to amount to 50 lakh rupees or more for that year. So, Act provides a safeguard to certain cases which cannot be reopened beyond 31st March 2021 and existing provision 149(1)(b). For example, existing provision 149(1)(b) notice can be issued within 6 years from the end of relevant assessment year, provided certain conditions are fulfilled. We will go through that. Now, amendments related to timing for issuing notice at 148 in case of reassessment of search, seizure, survey. So, for 3 assessment years, immediately what happens? Can issue notice immediately preceding the assessment year relevant to previous in which particular event occurs. Reopening of the 3 assessment year as stated herein would be automatic in case of assessee in whose case search, survey or survey is conducted. In such cases, no approval of higher authority required to be obtained prior to issuing notice under 148. Similarly, for beyond 3 years, this is in case of a search survey represented in form of asset 50 lakhs or more. In such cases, prior to issuing notice under 148, as per subsection 2 of section 149, read with section 151, approval of specified authority, principal chief commissioner, principal director general, or when there is no principal chief commissioner or principal director general, chief commissioner, director general required to be obtained. Now, further such proceedings says in case of such proceedings, case of 3 assessment years immediately preceding the year relevant to previous year in which search is initiated or requisition made or any material received shall be reopened in 148. D. Horse the procedure prescribed under 148A. Matlab 148A procedure need not be followed. Now, various decisions rendered by various courts may not be helpful to associate after the above amendment. So all these judgments have been overturned now because of all this amendment. This famous judgment of Supreme Court in Principal CAT of Meeta Gudgutia, Honorable Gujarat High Court in Somya Construction, Delhi High Court, then Kabul Chawla's case, famous judgment, Gujarat, this Delhi High Courts, other various decisions, honorable courts. AO was not empowered to make additions not relating to incriminating material found during the course of search for unabated assessment. There is now no bifurcation of abated and unabated as the prevailing assessment order passed under section 153A. Once the AO has legally reopened the assessment after fulfilling all the conditions laid down under the amended 148, an addition in reassessment order is also made based upon the information in possession of the assessing officer. He is of course empowered to make other additions also on the basis of data found during the course of reassessment. Now, there are 4 provisos, sir, to 149.1. We will see each proviso now. What is the first proviso? What is the second proviso? Third proviso? Fourth proviso. So, first proviso to 149.1, it says that notice under 148 cannot be issued at any time in a case for relevant assessment year beginning on or before 1st day of April 21 if such notice could not have been issued at that time on account of being beyond period limit of 6 years. For example, A has undisclosed income of 10 crores for assessment year 12-13. Under the existing provision, notice for reopening of such assessment could have been issued up to 31st of March 19. Correct? 6 years only from the end of relevant assessment. Under the new scheme of assessment, the notice can be issued up to 10 years, where the income escaping assessment is 50 lakhs or above. So, under the new provisions, such notice could have been issued up to March 23 by piece of assessment year 12-13. But due to the first proviso to section 149.1, because of this first proviso, notice under 148 cannot be issued since the time limit of 6 years as prescribed under the existing provisions has already expired. So, fair enough. They are telling what could not have been done, then now also cannot be done. What is the second proviso? Now they are telling where any search is initiated, requisition is initiated or on or before 31st March 21. Naturally, after your March 21, that new budget will take place. That new budget amendment has been done. So, any search initiated on or before 31st March, assessment or reassessment will be continued as per existing provision 153 ABCD. And aforesaid time limitation shall not apply to such cases. After any search or any requisition after 31st of March, that is from 1st of April onwards, new assessment provisions will apply. So before that, what are they telling? Second proviso, this existing provision only would govern 153 ABC. Since after 31st of March 21, 153 ABCD is deleted from the statute. Similarly, our third and fourth proviso to 149.1. So to compute the period of limitation for issuance of notice under 148, the time or extended time allowed to the assessee in providing an opportunity of being heard or period during which such proceedings before issuance of notice under 148 are stayed by an order or injunction of any court shall be excluded. If after excluding such period, time available to the AO for passing an order about the fitness of a case for the issue of notice under section 148 is less than 7 days, remaining time shall be extended to 7 days. Fair enough. Now, now this is the issue, which has now become a subject matter of writ before, all the courts. So, for example, we'll just go through that, Now, what is the issue now here? If you see, my dear friends, the old time limits have changed from 4 to 6 and 16 years. What was earlier up to 4, up to 6, beyond 4, up to 6 and 16 is now 3 to 10 years only. Outer limit for reopening assessment is 3 years only. If the following conditions are fulfilled, then only the assessment can be reopened up to 10 years from the end of relevant assessment year. Condition number 1, AO and his possession, books of accounts or other documents or evidence. Such documents, etc., reveal that income chargeable tax escaped assessment. Such income is represented in the form of asset. An income escaping assessment is 50 lakhs or more. And assets shall include immobile property being land or building or both shares, securities, loans and advances, deposits in bank, etc. Next. Now this asset inclusive definition, what about reduction of liability, unexplained cash credit, unexplained expenditure, etc. For example, 43B is there. TDS is not deducted, for example. Now, 4 years cases, 6 years cases, okay, more than 50 lakhs, I can go up to 10 years. Fine, sir. For example, in some of the cases, addition was made. I did not deduct TDS. For TIA, can I make a deduction now in the course of assessment? Does it become information? Is it an asset? You are telling me there should be an asset. The income, the undisclosed income, the concealed income should be represented by an asset. Suppose 43B is there. I did not pay the GST. Notice in the course of reassessment proceeding, can you make an addition? Does it represent asset? Similarly, for TIA, TDS should have been made, for example, 194C, contractual payments, etc. In the course of reassessment, income escaping assessment, etc. Can you make an addition now under 43B? Not possible. Because is it representing an asset? Again, for example, reduction of liabilities there, your 41.1, etc. How can I make an addition? Does it represent an asset? Or your cash credits and 68, etc. Does it represent an asset? No. So it is not there in your definition of asset. So I don't know whether the legislature, that is why I told, what is the reason for this magnanimity on the part of the legislature? Or probably amendment may be made in the next budget. And that too, that may be from retrospective amendment. They may, tinker or amend or alter or substitute the definition of the word asset. So all this, cannot be made, all these additions what I discussed, you cannot make it in the scope of reassessment now. Reassessment proceeding. Why? For example, your 50C addition. Where is the asset? Anyway. So we move on further. Now, this very important issue. Now, assessment year 12, 13, 13, 14, 14, 15, whatever. So you know very well, sir, this first proviso to, assessment year on or before assessment year 21-22, first proviso to 149(1)B deals with reassessment of 21-22 earlier years. Amended provision shall apply to all reassessment only after 1st of April 21, no problem. In case of assessment years prior to 2021, if the same could not have been reopened as on particular date, as being beyond 6 years under the erstwhile section 149(1)B, same cannot be reopened under the amended substituted new section 149(1)B. We saw that example of 12-13. Now, what about your 13, 14, etc.? We'll go through that now. Then we will come back. Where is that now? Yeah. Whether notices issued after 31st March 21 is under old law or new law is the question. In March 20, sometime 20th March, this amendment law came, taxation amendment law came into force. Timeline 31st March 20, taxation and other laws, relaxation of certain provisions, ordinance 2020. So, assessment year 13, 14, what was the due date earlier? 6 years from the end of relevant assessment year 13, 14, March 20. Fair enough. Pandemic is for you, pandemic is for me, pandemic is for the department, pandemic is for the assessment. So 13, 14 due date maximum, up to 6 years from the end of relevant assessment year. Up to March 20, I could have reopened. Beyond that, I could not reopen. So on 20th of March 2020, when there were just 10 days remaining, because of COVID, this taxation, other laws, relaxation of certain provisions ordinance was introduced, whereby the due date expiring on 31st of March 20 was extended to 30th of June 20. Thereby again, by notification, due date expiring on 31st March 20 extended to 31st March 21. And again, very important is on 29 September 2020, taxation, other laws, relaxation, amendment of certain provisions Act 20. Now, section 3.1, this is what is important, 3.1a. It says any time limit falling between the period from 20th March 20 to 31st day of December 20, or such other date after 31st day of December 20 as the central government may by notification, then it shall stand extended to 31st day of March or such other day of 31st of March, such other day after 31st day of March as the central government may specify. So therefore 29/10/90 20 again notification issued under 3(1) of the Taxation and Other Laws Relaxation Amendment of Certain Provisions Act for extension of due date of filing return and filing return of income. Now, meanwhile, what has happened? 28th of March Finance Act is passed. 28th March Finance Act is passed. Please understand. Old 148, 149, 151, 148A, you are now inserted by virtue of Finance Act. All the old sections are now amended, altered, deleted, substituted. So when I issue a notice after on 1st of April 21, you extended for the old years, 1st April 21 up to 30th June 21. So in my humble opinion, any notice on 148 issued on after 1st April 21, you have to compulsorily, mandatorily follow the dictum of 148A. But you are issuing notice under old 148. What is this? Because of pandemic, due date is extended. 20th of March 20, just for 10 days delay, the department wants 1.5 years extension. For 13-14 assessment year, 6 years from the end of relevant assessment year, up to 31st March 20, you could reopen. Just for 10 days delay on 20th of March because of the pandemic. Anyhow, you are issuing notices on the last date only. So for 10 days delay, we have given you 1.5 years time. I have no problem, sir, for extension of due date also. Because pandemic is for everyone, it's for global phenomenon. Pandemic is for you, pandemic is for associate, pandemic is for department, pandemic is for me. You extend the due date. But on 20th of March 21, a significant event has happened. Finance Act 21 has been passed in the parliament. And you are only issuing a notification. Through notification, can you extend even the section, implementation of the section? All high courts over India, writ petitions have been filed. They have taken an emphatic, exclusive stand that and stayed. All demands are stayed. Writ petitions have been filed, except for Chhattisgarh High Court. They are telling yes, even section 140 is also extended. By notification, can you extend a section? You can extend the time, sir. I have no problem. You issue notice under 148 under the old provision. You know what was 13-14 due date is March 20, extended to 30th of June 21. So you extended, you extended the time limit, no problem. You should notice under 148 under the old regime, no problem. But you should compulsorily follow the law as on first day of the assessment year. What is the assessment year? What is the financial? First day of April, 28th of March, law is passed, all procedural laws. So in my humble opinion, you should have followed the dictum of 148A. You issue notice for 13-14, sir, because of extension, I have no problem. But Chhattisgarh High Court, you are telling, even 148 is extended by virtue of a notification. When Finance Act 28th March is passed in the parliament itself, by virtue of a notification, can you extend even the operation of a section? Due date you extend, I have no problem, I am not questioning, sir. Because of pandemic, extend the due date. Yes. Notice you issue under 148 only, yes. But follow the procedure on 148A. Hence, all the notices issued between 1st of April till 30th of June without following 148A. Why Act was amended on 28th of March? You are bound to follow the dictum of 148A. Before issue of notice on 148, you should have issued order under 148A clause D along with notice under 148. But in none of the cases all over India, you have followed the procedure. Just by virtue of a notification, you have extended even the operation of a section. So therefore, all the high courts all over India, writ petitions have been filed and they have stayed the notices actually, excepting for Chhattisgarh High Court where they are telling no. Even that section 148 has been extended. But now they are, they have filed a petition also again, which is yet to be taken up for a hearing. Yes, if you see here with regard to section 148, several writ petitions are filed before various courts all over India. See the details of order and judicial pronouncement. You should know this. You should know all these details. For example, this Armada, What is this writ petition? Notice for reopening assessment issued dated. Now these are all, my dear friends, these are all, practical scenarios. Members should be updated. Our fraternity of chartered accountants, you have to update yourself every day, not even every week or every month. Now all these judgments you have to study now, because this is the new regime, sir, new reassessment regime. I cannot shift to the old reassessment regime now. What is prevailing on this day? Let us discuss a few case laws and what the court has given the judgment. Please understand very carefully, because you have to advise your clients in turn. Notice for reopening of assessment issued dated 7th April 21. This after 31st of March. Notice issued after 31st of March. 20th of March Finance Act is passed. You are issuing notice on 148 on 7th April 21 for 148 for assessment year 13-14. Due date expired on 31st March 20, normal course 6 years. But you have given 1.5 years. We have given you extension of time based on notification. So, what is the court is telling? Court is telling no. While notification by 2021 CBT extended the time limit to issue notice 148, which was time barred as on 31st of March to 30th April. However, 148A has been introduced by Finance Act 21 is 30th April and then was extended 30th June. Don't worry. So this court is telling now 148A has been introduced by Finance Act 2021 with effect from 1st April 21. This Bombay High Court, which requires certain compliances to be followed by ABO. You are extending on 7th April. But Act is passed on 28th March. So Finance Act is passed with effect from 21 148 is applicable, requires certain compliances to be followed by AO. Before issuing notice on 148, AO has to conduct an inquiry and also give reasonable opportunity to be heard before issuing notice on 148. Procedure laid down under 148 and not followed by AO. Bombay High Court is telling granted ad interim stay. See this Tata Communications now. Again, Mumbai High Court. Assessee challenge constitutional validity of section 3 of the, the taxation and other laws, relaxation amendment of provision 20 and notification number 20 dated 31st March 21 issued thereunder on ground that despite section 148 and various other provisions have been substituted by Finance Act 21 with effect from 1st April 21, your TLA Act, your taxation and other laws, relaxation amendment of Act, etc. TLA Act allowed revenue to issue reassessment notice under non-existent old provisions. Court is emphatic in its opinion, sir. Your 148 has been abolished in the statute, my dear friend. That provisions, old section has been substituted by new section. So, allowed revenue to issue reassessment notice on non-existent old provision section 148 on or after 1st of April 21. Assessee has submitted the impugned notice dated 21st May, in this case 21st May 21, which was based on non-existent earlier provisions of 148. Now the provisions have changed. Now 148, when can you issue? Post 1st of April, only subject to 148A. Bombay High Court is emphatic in its opinion. My dear assessing officer, you issue notice after 1st of April, I have no problem. Time is extended of 30th June. But you cannot issue that 148 on the non-existent earlier provision of 148. You please issue a based on new 148. And if I see new 148 section, it says subject to 148. So therefore, the court is telling whether on facts notice was held to be issued to Revenue and Attorney General of India held yes in favor of assessee. Now Delhi High Court, we saw Bombay High Court. In Delhi High Court, you see Ganapati Traders Private Limited, Ansal Properties and Infrastructure, Pranav Ansal, etc. Delhi, challenging the validity of notices of reassessment issued under 148, along with explanation notification that section 3 of that notifications. All this notification, March 31, 21, notification 38/21, notification 20/21, 38/21, dated 27th April. Similar petitions referred by Mudra Finance, Ansal Colors Engineering, SEZ, Ansal Landmark Townships. Impugned notification, all these judgments, Delhi High Court says impugned notification is contrary to settled principle of statutory interpretation. How beautifully the court is telling, understand carefully. Impugned notification is contrary, impugned notification to settled principle of statutory interpretation, namely that any action taken post the amendment of a procedural section would have to abide by the new procedures stipulated in the amended act. By virtue of a notification, which is a delegated legislation, the date for implementation of statutory provision as stipulated in the act cannot be varied or changed. Only by virtue of a notification, High Court is telling, can you, by virtue of a notification, which is in fact a delegated legislation, the date for implementation of statutory provision as stipulated that cannot be varied or changed. Karnataka, my own Karnataka High Court in Wipro Group against reassessment notice issued under old regime. Clear cut here, assessing officer, Karnataka High Court admits writ petition challenging the validity of notice issued under 148 for assessment year 14-15 in contravention of 148A. Same thing. What is the court telling? Court is telling issued notice on 148 on 30th June. This is last date, 30th June 21. You have issued notice even on the last date, despite I am giving you 1.5 years. Without adhering to the conditions precedent set out in 148A inserted by Finance Act 2021 with effect from 1st April 2021. Assessee, apart from challenging the validity of notice issued 148, has also challenged that CBDT notification. That notification 20/21, 38/21. Please challenge blindly. 20/21, 38/21. That is dated 31st March, dated 27th April. As ultra wires the provisions of the Act and taxation and other laws 2020, in case it is held that extension of pre-amended reassessment regime does not require revenue to comply with procedure of section 148A, etc., etc. Delhi High Court again now in case of Manmohan Kohli. Assessment year 7/7/21, sir. So Manmohan Kohli contended that notice barred by 1314 actually. Notice is barred by limitation prescribed at 149 as amended by Finance Act 2021 applicable with from 1st April 21. Also contended that prior to issuance of impugned notice, revenue did not follow the mandatory procedure under section 148A. Again, please see this. This is judgment Fateh Overseas Private Limited, disposed of only through video conferencing. In fact, same thing. Impugned notices are barred by limitation prescribed under 149 of the Act as amended by Finance Act 21. He further submits that the impugned notices have been issued in violation of mandatory procedure prescribed under 148A of the Act, Wide Finance Act 21 with effect from 1st of April 21. He also submits that the impugned provisions are ultra via the power delegated to central government as section 3 of the Taxation and Other Laws, Relaxation Amendment of Certain Provisions Act 2020, etc. So Learned Counsel states all this. Then the court is taking a stand. Having heard the Learned Counsel, court is of the prima facie view that the impugned notification is contrary to settled principle of statutory interpretation, namely that any action taken post the amendment of procedural section would have to abide by new procedures stipulated in the amended Act. Further, this court is of the prima facie view that by virtue of a notification, which is a delegated legislation, the date for implementation of statutory provision as stipulated that cannot be varied or changed. What is emphatic? Also see, some of the, the stand taken by other counsellors for department counsels, court is also of the prima facie opinion. Section 6 of the General Clauses Act 1897 will offer no assistance to the respondents as the new section 148 demonstrates an intent to destroy the old procedure. Then again, this is Ajmer, Rajasthan High Court. So all judgment is given, sir, except this Chhattisgarh. This Chhattisgarh I am giving you here. And that is what they told, that even 148 is extended basically. So the last two sections we can go now. Namely, 151 and that, yeah. Yes, 151A. So what is 151? Now the sanction. 151 is, sanction for issue of notice. So here now, who will sanction, sir? Entire section 151 has been substituted. New section 151 is substituted in place of the old section 151. Now 151 they are telling specified authority for purposes of 148 and 148A. So even for issuing 148 and even for following the procedure laid down in 148A, B, C, D, you have to take specified approval from whom? From specified authority. Who are those authorities? principal commissioner or principal director or commissioner or director of 3 years or less than 3 years elapsed from the end of assessment year, or principal chief commissioner or principal director general, or where there is no principal chief commissioner or no principal director general, chief commissioner or director general more than 3 years elapsed from the end of 11th assessment year. They have made very simple. In order to avoid misuse of extended period of reassessment, sanctioning power has been given to principal CCIT, principal director general. So beyond 4 years, now it is, earlier it was beyond 4 years up to 6 years, etc. Now it is amended provision. Beyond 3 years is principal CCIT, principal DGIT, where such officers are not deputed CCIT or DGIT. Up to 3 years is PCIT or principal DIT or CIT or DIT. Now the word satisfied also has now been replaced by the word approved. Now section 151A. What is 151A? Or faceless assessment of income escaping assessment. Now even that faceless assessment or income escaping assessment also, they have added this. Or conducting any inquiries or issuance of show cause notice or passing of order 148A. Everywhere, you know, those 3 magic words so as to impart greater efficiency, transparency, and accountability. Now, your 153 ABC deleted from the statute, sir. Now, taxpayers charter, the income tax department is committed to provide timely decisions, etc., collect correct amount of tax, respect privacy, reduce cost of compliance, provide mechanism to lodge complaint, you know, holds his authorities accountable, maintain confidentiality, etc. So this is a comparison of new scheme. We also did that. Earlier, you know, old scheme, reason to believe. Now what information suggests that income escaped assessment? Procedure before issuing a notice in non-such cases was what? Reason to believe that income has escaped assessment. Now you have to follow the process laid down in 148A. That 148A procedure, I told you clearly, it is all in non-search or non-requisition cases. Conduct an inquiry, grant an opportunity of being heard to assessee, consider reply of the assessee, pass an order. Then sanction up to 4 years, after 4 years, that is in earlier, now up to 3 years and after 3 years, etc. Time limit was 4 to 16 years earlier, now it is 3 to 10 years. Now time limit to complete assessment, you know that 9 months from the end of a financial year, notice was served, that is 148, etc. Extended by 12 months if reference is made to the on-transfer pricing officer, no change. So we have almost finished our discussion on 148. Now, you know, we can take up some questions and answers if there are any. Thank you very much for, you know, your patient hearing, all of you members. Yes, sir. Am I audible, sir?
Sir, thank you, Speaker, sir.
Yeah.
Your session is very nice and lucid explanation, sir.
Thank you, sir.
Thank you, sir. Now the floor is open for discussion.
Yeah.
Members, please unmute yourself and raise your queries.
Yes, sir. Sir, it will take some time, you know, for all the members to digest, you know, because this is a new provision basically.
Okay, sir.
And issues will come in future.
Okay.
But, you know, we need to, you know, now prepare ourselves basically.
Okay, sir.
Despite the writ petitions being filed all over India, ultimately as a chartered accountant, my dear friends, you know the facts of the case. So I am never advising you for the evasion of tax. Evasion of tax, you know, cannot be done. Even though income is escaping assessment, so we are technically questioning, etc. All that is all right, but never indulge or advise on evasion of tax. That is my humble opinion and humble request to all the members. Do not think, you know, technically we can question anything and everything.
Sir,
I think if there are no questions, yeah. Tell me, sir.
no, sir, no, sir. Only one question asked by CA Sanjeev Rajan, sir.
Yeah.
Return filed in response to notice under section 148, just before the date fixed for order under section 144. Whether the department has to act on the return file.
Sir, you are right. You are right. They have to act. They cannot, you file the return just before date fixed for the order 1 month. The department has to act on the return file. You are right, sir. Otherwise, it's a very good case for writ petition. Yes, sir. If you see here, I've got this various cases. High courts have set aside the assessment order passed by the revenue without granting an opportunity of being heard, without considering the request for personal hearing. On the tab is there, you have to click that personal hearing also. Naresh Kumar Goyal versus NAFSC Delhi writ petition. Then your Ritanand Balwa Education Foundation, Umbrella ORG of MET Group of Institutions, Honorable Delhi High Court. Sanjay Agarwal versus NAFSC Delhi writ petition again. Nena Lal Kidwai versus NAFSC. All these under the faceless reassessment, sir. Then DJ Surfactants versus NEAC and others writ petition, Honorable Delhi High Court. All these Delhi High Courts in your faceless assessment writ petition. High Courts have set aside the assessments passed by the revenue without granting opportunity of being heard, telling that principles of natural justice have been violated. Fine, sir.
Okay, sir. Now a vote of thanks, sir.
Thank you. Yeah, please.
Good evening to one and all. On behalf of MBSIRC of ICA, I would like to take this opportunity to place on record our heartfelt and sincere thanks to our speaker, CA Naveen Khariwal ji, who spared his valuable time to address our member on response to notice under section 148 of the Income Tax Act. Sir, your session is very excellent, informative, and the session is beneficial to all our members, sir. Thank you, sir.
Thank you, sir. Thank you very much.
And I also thank our past chairman, fellow members, and all junior members. I also special thanks to all Madurai branch managing committee members. Again, I thank you for being with us this evening. It is a great pleasure. Sir, thank you, sir.
Thank you very much, sir. Venkatesh, sir.
Sir, if time permits, definitely you visit our branch physically, sir.
Definitely. Sure. Thank you. Thank you.
Okay, thank you, sir. Thank you, sir.